Hello. I want to talk about money. Money is a thing I think a lot of people don't really understand. When you think about money, it's probably a mishmash of things. First, we all need more of it. Most people have a job and trade their time and work for a salary of some kind. You may be really frustrated because you need to pay for rent or food, or your wife just wrecked the car and now you need to shell out a bunch of money for a new car to get to work to make more money. Money! It can be consuming to think about because it's such an everyday thing at the Main Street level. The next thing you might think about is the big banks and government. Now, this is an absolutely huge topic that can't be covered in any depth here, but suffice to say, we hear a lot about corruption and manipulation. We all know about the government big business revolving door. We hear the stories about lobbyists, and we hear the word millions, billions, and trillions, and eventually the whole thing seems like this out there thing, this black hole of stuff that really can't be known about. So the conspiracy theories fly around like a big flock of birds. I will probably go into various stuff like the 2008 crash, maybe the LIBOR case, the gold standard versus fiat money, all that stuff. But this video is all about money at the Main Street level, the money that we actually directly interact with. So, money. We all need it, right? How do you get it? Well, there's basically only two ways. Make it yourself or get someone else to give it to you. To make it yourself is called counterfeiting. You'd be amazed at how simple the technology you need to do this is. Now, before you go out and try it yourself, go on YouTube, find a video that shows you how to counterfeit money, go get a printer and start printing out $100 bills. The Treasury has put many security features into new notes that are practically impossible to duplicate. So while you may be able to make the picture look right, the paper, actually it's a type of cloth, is impregnated with certain chemicals and lines, watermarks. Your Federal Reserve notes are almost a whole technology in and of themselves, and they can track it back to you. So I'd advise against becoming a professional counterfeiter. And of course, there's theft. You can try it, but I'd advise against this as well. The only legal way to get money is to get someone else to give it to you. Most people do this by getting a job and trading their work for a paycheck. We all know how that works. Now, while these are ways to make money, not many people think about growing the money they already have. They get their paychecks and trade it for consumer products. Is this what rich people do? Hell no. Rich people grow their money. How do you do this? I call this adding value. For example, let's say you buy a car and you outfit that car with a bunch of stuff that you got at the junkyard. You add a supercharger, you add a cold air intake system, change out the tires, and now you sell that car for more than what you bought it for. You're adding value to it and making a profit on it. That's kind of what happens in every consumer product store. They sell something for more than they bought it for. Simple enough. Now realize, in talking about money, I'm doing this in a theoretical sense. No, you aren't growing it when you grow your money in size or adding value by stacking it up. What you need to realize about money is that money is valued relative to something else. I think an analogy is in order. Say I buy a house in 2009 at the bottom of the housing crisis, and I pay cash. There are costs associated with owning that house, like taxes and whatnot. But let's just stick to the value of the house itself. Say I pay $50,000 US for that house and wrap it in plastic and nothing bad happens to it. In 2015, the house is now worth $200,000. The house is no different than it was when I bought it, but now it's increased in value. This is called inflation. Now, you may be thinking, bullshit, inflation is what happens to money, not houses. Well, you have to understand inflation is a concept of relative value, not just money. It's actually a pretty complicated thing. Inflation is the increased value of one thing versus another. To illustrate inflation, think about the housing bubble and hyperinflation. In the housing bubble, what happened there was houses were getting more and more expensive, far more than they should have been. This is due to many, many different factors: the government, regulation, mortgage companies approving people that they should not have been approving. There's many factors that went toward the housing bubble. But suffice to say, the point is, price of houses was overly inflated and eventually the bubble popped. The price of a house versus a dollar was rising very, very quickly. The same thing happens with money. Money gets less expensive relative to consumer products and foreign currencies. And if you think about it on the other side, those consumer products and foreign currencies get more expensive relative to money. That's sort of how that works. That's how inflation works. So understand when you're talking about inflation, the money's getting less expensive relative to what you can buy for it. In hyperinflation, the money gets much less expensive relative to these things. In hyperinflation, the currency gets really, really cheap versus everything else.
That's why you can see $100 million Zimbabwe notes.
According to this Christian Science Monitor article, bread costs 10 million Zimbabwe dollars back in 2008. In the case of the housing bubble, a $100,000 house today may have cost $500,000 at the height of the bubble. So understand, to really get money and understand it, you have to understand that money is all about what the relative value of that money is. So I'm going to use the term inflation to mean the fluctuation of the value of a fixed amount of money. In the case of the house, I bought something and that thing's value increased relative to the value of the dollar. Yes, this can be complicated until you think about it for a bit. Now, how can we use the concept of inflation for ourselves at the Main Street level? The word for this is called investing. We've all heard of this term. We've all heard about investing for your future, retirement planning, all that stuff. You've probably seen maybe flyers that you get in the mail saying, buy this stock now, it's gonna explode, all those things. Well, there's no safe way to do this. The value of an investment can increase or decrease. It is always risky, but it's really the only way to increase your total net worth without trading your time and work for money. Of course, like I said, you can add value. You can sell something and take the profit. And that's kind of the same thing that you're doing with investing. You can buy anything as an investment if you resell it again. But the most common ways to do this are basically buying stocks, also called equities, real estate, or derivatives, like options or futures contracts. Each of these things, also called investment vehicles, are bought and sold in order to take advantage of their changing relative values. I'm going to use some stock charts to illustrate how a retail investor might make money. Now, before we get to the charts, I want to premise this by saying this stuff is not as complicated as you might have heard, but it is risky. Your money can decrease in value just as easily as it can increase in value. No, it's not complicated necessarily, but it is and always will be risky. If you see a book that says, get rich by investing in the stock market, I have the secret to knowing how stocks are going to move, all those things, don't buy it. In fact, I would recommend everybody that hears me, do not pay any money to anyone who tells you they can help you get rich in the stock market. The only thing I would recommend to anybody listening is, if you want to, buy tutorials, buy books that explain things and how they work, but never buy anything that tells you this is how you can get rich in the stock market. There is enough information online. You never have to buy anything at all. So here's a chart of the daily EPE. Daily means that each line on this chart is 1 day's worth of trading. And EPE is a stock ticker. That's a 3 or 4 letter indicator of the name of the company. If you want to find out more about EPE, go ahead and look it up. It's very easy to find. I'm using candlesticks on this chart. On this time frame, the daily, each candle, that's the little red and green things that look like candlesticks with wicks on top and bottom, show 4 pieces of information. The price of a share of EPE at 9:30 a.m. and the price of a share of EPE at 4 p.m. make the body. If it's green, that means the price at 9:30 is the bottom of the body, the bottom of the green part. And again, if it's green, the top of the body, the top of the green part, is the price of EPE at 4 p.m. Now, the little black lines on top and bottom are called wicks. That's just the name they gave them. But the top of the wick is how high the price got throughout the day, and it ended at the top of a green body. Does that make sense? I hope that does. And the bottom wick, the bottom black line, is the range of where the price went below, again on a green candle, below the opening price at 9:30. I hope that makes sense. So that's 4 pieces of information. We can also call it the open, high, low, and close. The opening price, the closing price, and the high and low. So that's your 4 pieces of information on any candlestick. So notice on this chart, the x-axis is time and the y-axis is price. Look at the candle with the arrow pointing at it, the little blue arrow on the bottom. At 9:30 on October 1st, the price was about $5. At 4 p.m., the price was about $5.25. During the day, the price actually dipped down to about $4.90 or so, before ending the day at $5.25. So you see on a stock chart, the dollar value of a stock share varies. How does this happen? Again, it's kind of complicated and this could take a while to explain. I won't go into great depth here. Suffice to say, each time the stock is purchased, the price will change. Someone could buy it or sell it. If someone buys it, they must buy it a tiny bit higher than the previous price. If someone sells it, they must sell it for less than the previous price. So the relative value changes as the market buys and sells the stock. Now, how can you take advantage of this? Buy some shares. You can open a brokerage account for free and buy stock yourself. Now, like I said, this is risky. If you can't lose money, don't buy stock. But if you have some money that you aren't worried about its value going down and up, like I said, it's a 50-50 possibility, and you buy shares of a company that won't go out of business, you can reasonably expect that you will eventually be able to profit. Best part is, if you hold on to your shares for over a year, you get a much lower tax rate on your profits. Do some research, people. Open an account and learn how the stock market works. You may not decide to trade yourself, but learning about the stock market can give you a much better appreciation for how money really works. You won't be taken in by these conspiracy theorists because you will know better than most about the how, what, and why behind so many news articles talking about, oh my god, the sky is falling because the Dow lost 200 points. Bullshit. Here's an example. Remember how the world was ending in 2008? In the Standard & Poor Index, the value of the index fell to about the low of 2003 and then exploded right after. Right now the SP 500 is flattening out and will likely drop some, and we will likely hear about how the world is ending again. Realize these indexes are a reflection of the actual companies that make up these indexes. The business cycle has highs and lows. That's just the way it is. Companies will have great earnings and bad earnings. Bad news stories will lead to massive drops and massive explosions. Learn how the financial markets work, and you will suddenly have a whole new understanding about how your world works. It really is amazing how the news looks with this new understanding informing your thinking. That's where I'll leave this discussion right now, and I hope to talk more about the markets in the future. Thanks for listening.